Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone's having a great non-farm payroll Friday morning. So we are going to go ahead and talk about, well, we've been caffeinating and dominating already this morning. I'm going to walk you through what we did in the Sector Secrets Mastery just 30 minutes ago. And that was the way in which we set up, as I like to call, the first come, first serve trade on hot zones using hourly price movement ranges. And so when we're jumping into something like this, a couple basic things, and I'm showing you the notes from the session. This is something we do in all my sessions where we keep the levels, we keep the notes, we keep the ideas running on the left margin so that when the inevitable interruptions in life occur, you've got an easy way to get right back up to speed on the trades and the ideas. All right, so in terms of what we've got going on with a macroeconomic event like NFP, we know that, and you'll see here, I took the rate cut expectations before NFP came out. We'll take a look at that here this morning. And I'm going to walk you through exactly what we did in the mastery. And that was we identified the red limit sell zones for resistance or a profit target. And then the green limit buy zones for the entry. Okay. We knew where our initial target was, which is in between the two levels. And ultimately, what we had were buy setups that triggered in the hourly price movement range zone. So if you're wondering, Rog, can I trade futures with hourly price movement ranges? Absolutely. And can I use them for hot zones? Hot zones are a scheduled volatility event, right? Hot zone, that's exactly what a hot zone is. It doesn't matter if it's non-farm payroll, FOMC, Powell speaking, or earnings. It's a scheduled, we've got to know it's coming, volatility event. And so what we were able to do, and let me show you exactly what our setup for the alert was. The buy zone was 47.01 and 3/4 to 47.10 and 3/4. You might say, Rob, that's kind of a wide zone. This is a massively volatile hot zone. We have to be open to the fact that the range can be pretty wide before support kicks in. But this is cool because if I know the most aggressive I'm allowed to be is 47.10 and 3/4, and the most conservative I can be is 47.01 and 3/4, and right in between those is the moderate, I can choose my own adventure. I can choose where I'm going to engage the S&P on the pullback. Now, I will say, this is something we talked about during the session. I really, really wanted the short sell. I absolutely wanted our limit sells to trigger for a number of reasons. I was bearish going into this event, but bearish is not the same thing as having a triggered short sell, right? Our expectations were, because we were below the previous session close, because we were below the propulsion, because we were below the 200, there was a lot of reason to expect a little bit of movement to the downside. But unless I get my price, gang, that means that the pitch across the plate was not in my zone, right? We've got to be patient batters. I'm sure a lot of traders chased this lower. I'm sure a lot of traders did. We won't. Why? Because as the sell-off happened, it landed us in the zone of support that we call the hourly price movement range. And once we got down there, our limit orders to buy triggered. Now, I'll put these orders in. All the homework that we do, my orders are in at latest by 8:28 a.m. Eastern. Today it was in a little bit before that, but at latest, I put my limit orders to buy and my limit orders to sell in before the event. Now, you might say, Ron, you put both those in? Yeah, it's called bracketing. Whatever gets triggered, the other is the second profit target. So if the short got triggered, the limit buy becomes a second profit target. You might say second. Yeah, I mean, we're actually on our way to the second profit target right now, gang. I've got a position from 47.01 and 3/4. I've got a position from 47.06 and a half, and I've got a position from 47.10 and 3/4 that continues to march up through our first and now second profit target. So yeah, it's a pretty good morning. If I had my way, I would say that I don't want to be necessarily an active day trader this morning, but I do want to look for potential swings. But by the time the bell rings, the bulk of my trading for today will be done. Two setups, NASDAQ and S&P, and both were filled. All right. And so that is, and again, let me show you what the NQ zone was. Green zone for the limit buys, 16,360 to 16,321. That's how precise I'm going to be. I'm not going to let the emotion of this candle, I'm not going to let a market order dictate my entry, especially during a high impact volatility zone, AKA a hot zone. I'm going to get lousy fills. I'm going to park my order, let the market come to me, and let me use my trading platform as my trading partner, right? It's going to be far quicker and far less emotional. I was just telling the folks in the mastery, I've done dozens upon dozens upon dozens of these trades, non-farm payroll specifically. And I don't care how many thousands of trades more I'll put on in my career. If you don't get a little bit of the deep breath when you're putting in your order and a little bit of butterflies when you're trading high impact events, you are not respecting what the market's capable of. I hope I never lose that feeling. It's not as bad as it used to be when I was a new trader, but it's still there. It's still absolutely there, and that's healthy. So now from that zone, right, I've got the long position. First target was 16.4, and now we'll look at to the second target, right? And that's pretty much how we trade futures pre-market. Now, this could work for GDP, non-farm payroll, PCE, CPI, initial claims. Initial claims was something that used to be a big time hot zone. Let's see. Anything at 8:30 that has a inflation or employment implication is worth keeping an eye on for setups like this. So I hope that helps. All right. So what I do want to do now is take you on over to the next part of today, which is there's a trade and then there's the macroeconomic implication. So let's jump on over to March 20. March 20 expectations for a rate cut. Before NFP, we're at 60.4. Wow, we're at 53.6, gang. That is that's significant adjustment lower. Those expectations for rate cuts aren't gone, but they're definitely not as high as they were just even last week. Wow. All right, May rate cuts have gone from 47.1% to 41.3%. Gosh, again, another big move. And wow, okay, so this is far less clearly dovish. This is not something where the hold is probable. It's just that now we have a horse race. Now the hold versus the quarter point cut. Now there's a debate going on. Now there's really a debate as to how aggressive should and does the Federal Reserve have to be in light of the data. Notice I haven't even looked at the non-farm payroll yet. I'm looking at how it lands. I'm looking at what it affects. Far more helpful than debate what the NFP numbers are versus how they're being responded to. Take a look at June quarter point rate cuts. Wow. Was 43.4, now it's 35.6. So these are a drop-in. Yowza. Okay. But again, doesn't mean that this couldn't change with, any of the data that we have before now. In March 20, remember, gang, there's no expectation for a Jan 31 meeting to do anything but hold. So that's never been something where, we could cut in January. No. That's not even probable. It's barely, even being discounted. The real conversation is what are we going to see in March? And March is still really a long way off. So let's not just say, we're not going to get a cut. Let's just remember on January 5, this is our opinion of the March 20 meeting. All right. Still, rate cuts are very much on the table. And so that's the way we'll look at this from a macroeconomic standpoint, a rate of change understanding of jobs and inflation mostly, and how that impacts our expectations for rate cuts and the Fed messaging that would accompany this. And chances are, based on this, the Federal Reserve, when they do speak, any of the members are likely going to be still dovish, but hesitatingly so. They're not going to be as overtly dovish. They'll probably talk about headwinds and whatever else, but they'll be dovish, but not as heavily dovish, unless they want the market to readjust to, hey, we're going to cut in March. So we'll keep an eye on that. As always, gang, if you have any questions, feel free to type them in. Phone lines are open for your request. This website is the CME FedWatch tool. Dave Williamson. Yes, this is the FedWatch tool. If you Google CME FedWatch, it'll take you to the cmegroup.com website, and this will pop up. So just Google this CME FedWatch tool, because the URL is a whopper. All right, so that is that. Let's go on back to the charts, and bear with me here. Just move this 5 minute aside. I'm still managing my last little bit, my last third of that long position in the NQ and ES. So I'll probably take this into what I'm debating now is whether I'm going to close this out before the bell, because it's a monster trade at this point, right? And we could see a lot of volatility on the bell, or I'll really cinch it up to a tighter stop. By the way, my mastery folks who are watching Charts and Coffee right now, please move your stop to a trailing at the T1. So take a look at the notes, make that adjustment if you've got that open position. All right, first question up is, what was the news on Amazon? Oh, yesterday, which it pretty much faded all day long. How frustrating was that? The news on Amazon, and I think the continued news on Amazon, we're out of that trade. That was grand opening, grand closing, took the paper cut, less than 1.5% risk to the account. I like to talk about losses, and I like to talk about losses because if you learn to take them well, if you learn to just take them when you can, not when you have to, you are going to be trading with the discipline you need to play this game well. That said, I believe it's mostly TikTok. It probably really doesn't matter, to be honest, John. But I've heard everything from hearings, which I didn't see much of, to the TikTok entering e-commerce, which I would imagine could affect even Shopify. So I would have expected Shopify to respond pretty negatively to that. It didn't. But I would say it's mostly the TikTok news that there might be going into e-commerce. Am I still bullish the SMH, Munir? As long as the trend is up, I am absolutely still bullish. It's barely shaking up right now. It's not one that I would say is broken in terms of the overall uptrend, but generally speaking, I am. But remember, bullish and buying are not the same thing. I'm looking for a buy setup. I don't have one yet, but generally speaking, I am bullish. Yes. All right, next up, BLP says, I just joined the mastery. Awesome. Good to have you. Thanks for joining our Sector Secrets Mastery, or as I like to call it, the Sector Food Dojo. How do I know when I am live trading? All right, so BLP, if once you enter the chat room, the wallpaper in our chat room is always the TV guide. It is always the schedule. So I would say now that you're in the mastery, you can log into the Sector Secrets Mastery chat room. That wallpaper that's up when I'm not in the room or the bot's not in the room will be our schedule. So it's always available for you to check out. I believe the schedule is also in the member dashboard once you log in. And then when I have bonus sessions like today, I alert those out. These are extra sessions that we do in addition to the fairly active. We are together every morning, gang, for 2 hours in the mastery. Every single morning from 9:20 to about 11:20, we are live day trading and swing trading. On Tuesdays, we add our position portfolio trades. So day trading, swing trading, Monday through Friday. We have scalping. The bot will do live in the room throughout the sessions. And then she has a dedicated scalping session on Thursdays. So check out that schedule. And then if we have additional sessions like today's non-farm, that will go out as an alert. Okay. All right. Is this a process that could be used in earnings? Michelle, I use a completely different overnight process for earnings. I would not recommend. And by the way, remember, Michelle, most earnings are going to come out before or after the bell. So I don't have really the kind of access to the stock liquidity that I want, especially I'm going to trade options. So no, I would not apply this to the volatility of earnings. However, I have a completely different type of earnings approach that I use. It's called 642 earnings. It's a 642 swing trade. It's overnight exposure starting out about 6 weeks before earnings, but that sweet spot's really about 4 to 2 weeks before the release. And it's a longer term swing, taking advantage of all that ramp up, all that preparation for earnings. I find that to be far better in terms of probability. I find that far better in terms of win rate and far less erratic in terms of just trading a binary event of the wacky earnings response and the potential for volatility crush. So if you want to check that out, Michelle, two things. We have been doing a regular session as we're going into the first earnings season of the year, every Tuesday afternoon in the Sector Secrets Mastery. And then if you want an overview, the Trish Boss has posted over at Countdown Trader a few times some updates of my 642. So if you go to the Google and type in Countdown Trader 642. Just go to Google, Countdown Trader 642. You'll get a number of the earnings updates. So that's the easiest way to find it. Otherwise, the URL is kind of messy. So Google Countdown Trader 642 or 642 earnings, and you'll get all the breakdown of how I trade earnings in terms of the window, focusing on trends, and how I view that opportunity. That is really volatile, and I don't trade it the way most folks do. Most folks want to make a binary guess on which way it's going to go. I don't want to have to do that. That's kind of a lottery scratch-off ticket approach to me. I want to trade the more predictable ramp up into it. All right. Next up is Tesla. All right. So San asks, could I review Tesla? Sure. So Tesla has been a tricky symbol. In fact, I was just talking to the Trish Boss about this stock just yesterday. And we were talking about the fact that this is one of those stocks that is not in a trend. And it's therefore not been high on my list of symbols to focus on. Tesla also does not necessarily move with the broader averages, even though it's heavily weighted in the S&P and the NASDAQ and the XLY Consumer Discretionary ETF. It's not one that tends to play along with the others, which for me is a little bit of a knock against it because I like the predictability of a stock that moves with stocks that are in its sector and stocks that are in its index. That said, there is a fantastic, highly, highly effective way to trade Tesla. All right. And I'm not going to show you just now. I'm going to show you what it's been doing for the last 5-6 weeks. And it's probably really good timing because everyone has until next Friday to scoop up the very indicator that I'm using for this. All right. Daily price movement ranges. So I'm going to clean up there's a lot of moving averages. We're doing some testing in the room right now, or I should say I'm doing some testing at the moment. So I'm just going to clean a couple things up here so you can see this clear as vodka. All right, so let's see here. Make sure I don't have these on. So I'm just going to take the moving averages out because the wave is only applicable as a mean reversion in a trend anyway. I don't have a trend here. So let's look at this the way I would look at a market that's not trending. And let's get this off the chart. There we go. I've got a lot of grabbing waves going. There we go. Okay. Forget everything else. All right. I've cleaned this up. I've taken everything off. Just look at the yellow and the gray. When the overall trend is up, and I don't think anyone here is thinking Tesla's weak per se, it's just not in a trend. It is above the 200 propulsion, which is really important to note. Every time a candle, whether you use my grab candles or not, right? Every time a candle sinks into the gray zone, how many times has it done it? Let's go back to the middle of November. I'm not going to use a well-chosen example. Let's look at all of them. 11, 10. So November 10, November 13. We touched again on November 17, again on November 21 and November 22, November 28. We touched again on 12/5, 12/13, December 13, December 14, December 20. All right. And then most recently, and this is an important one, gang. By the way, every one of these that I just pointed out, if you bought in the gray zone and you let it move up to the yellow zone, was a winner. I want to show you a loser, though. I want to show you a loser. Here's one. All right. It touched the gray zone. It did go to the yellow. All right. Maybe I'm being too harsh. I'm trying to find a loser because I don't want to say, hey, this is 100%. I'm trying to disprove my own indicator here. Let's be reasonable. Nothing wins all the time, but daily price movement ranges sure look like they do. They are just that good. But the next time I'll be buying, the next time I'll be even considering buying, I guess that one worked too. See, I tried to find a loser here. Um, I won't even consider it until it touches the gray zone again. Sand, there you go. And that's my answer. That's what I'll look for. And until that happens, I'm uninterested. All right. Price needs to reach a trigger. When the trigger is reached, then I'll go ahead and look at the market structure, the underlying structure, which is still neutral, which is still not trending. And then I'll determine what it is that I want to do. Maybe it's sell premium, which I tend not to like to do, but a lot of folks do. Maybe, sell put premium, or I'll buy a call. Long call, cash account, that's what I like to do. And so until it gets down there, I'm really not that interested in a trade in Tesla. And again, it doesn't mean other setups may not work, but that's what I use. And just again, I don't know how many folks will show you the indicator, how it worked through a span of 4, 5, 6 weeks. That's how DPMRs worked on Tesla the last, 6+ weeks. Pretty darn good. I tried to even show a loser and I couldn't find one. There you go. All right, gang. As always, thank you so much for being here for Charts and Coffee. Caffeinate and dominate, my friends. We have the NFP aftermath this morning. We're going to manage at open ES and NQ winner. I'm probably going to think about getting out of it. My Sector Secrets Mastery, folks, I will see you in just a minute. Everyone else, thank you as always for being here for Charts and Coffee. I really appreciate it. I love talking with a group of passionate traders, and I love the fact that you're willing to spend some time every morning with me and your coffee before we get to our trading day. All right, be good to each other. I'll talk with you soon.